Hi, everyone. Today, let's talk about Citizens Bank buying a large part of Silicon Valley Bank. Then we'll go over the Fed futures since they continue to swing all over the place. Then we'll talk economic calendar just for a moment. Then we'll go over my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future videos. Welcome to the Portfolio Bulletin. Let's get started. So Citizens Bank actually went up on a purchase/merger. It's pretty uncommon from what I've seen. Usually banks like this go down, just like we saw with Credit Suisse merger, but they actually went up 50%, which is interesting. You can see they bought a large part of the Silicon Valley Bank. They purchased around $72 billion of the debt at a discount of around $16.5 billion. So that's quite a huge purchase, but it's good to see that banks like this have the purchasing power to buy this kind of debt, even if it's marked down at a major discount. In my opinion, this also increases some of the confidence in the banking system, meaning that these loans from Silicon Valley Bank were actually good loans and worth purchasing, even if they were at a relatively substantial discount. I do mention here that $90 billion of securities and other assets continue to stay in receivership for disposition by the FDIC, so they're still looking for buyers, I guess, for this $90 billion. But if they sold 72 out of the 90, that's a pretty good purchase on the first go, and I'm sure that they're still looking for a purchaser for these remaining assets. It's interesting here that they mention the estimated cost for SVB's failure to the deposit insurance fund will be around $20 billion. And finishing up here, they mentioned that when SVB moved into the Bridge Bank, they had about $167 billion in total assets and approximately $119 billion in total deposits, which actually seems fairly healthy, especially when you offload $72 billion to this adjacent bank. The question is, what's the value of the remaining assets? And if it's treasuries, like a lot of these articles have been saying, it seems like this might not be that big of an issue and that it might be solved in the private sector for the most part. Moving over to the Fed futures, you can see it's about 5 weeks away, but looking at the numbers here, we're back to about 50-50 between the two. You can see yesterday we were at 83% chance of a pause, and now we're at 50-50 once again, whether we're going to get a pause or a 25 basis points. So this continues to flip around quite a bit. Just have to watch it every day as the market reprices what we think is going to happen. And then looking at June here, if we do get the 25 basis point hike, we're most likely going to get a pause. But if we get the pause in May, then we should be looking for that 25 basis point hike or a potential pause as the second most likely. So June hasn't changed that much, but May continues to flip around quite a bit. And of course, this is driving down growth in the NASDAQ, and we'll take a look at that when we get over to the charts. Moving over to the economic calendar, you can see wholesale inventories, always interesting to see how the retailers are doing. But later in the day here, you can see consumer confidence at 10 o'clock Eastern, which is interesting. That's during market hours, so keep that in mind. You see the market kind of go a little bit crazy at that 10 o'clock Eastern hour. It's because consumer confidence is coming out. We're expecting a step down from 102.9 to 101. This is also a pretty good indicator of how the economy is doing as a whole. If this goes higher, then we're probably going to see a jump to 25 basis points as the most likely case for May. But if this is reduced here, that could swing back to that 80% chance of a pause in May. So watch for this tomorrow at that 10 o'clock hour. Moving over to the charts, starting off with the S&P 500 here on the hourly chart and the 12-hour. You can see hourly, we gapped up, hit resistance, moved down, tested the previous day's high, and then rallied. So we kind of chopped in and around here. Still a bullish day, still interesting. Looking at the 12-hour here, you can see that longer-term resistance going back to this previous downtrend. We're testing that level here. We're also testing the level of highest volume. Talked about this being the upper resistance on Sunday's video, as well as Friday's video. So make sure you're checking out each and every video so you don't miss out on these resistance lines here. We were pretty much spot on what we were talking about. Looking to see if that level is going to break. If it does, then we're looking up at that 399.34 level, this previous consolidation high. And then if we can get above that, there's pretty substantial upside here to 404. So watching these levels after the rejection, finding support. This last candle of the day was a little bit interesting here, but we did find buyers through a wick through that previous low, and we closed up a little bit here after hours. So 12-hour momentum still bullish. hourly momentum stepping down, but this could finish its bearish momentum in the after hours here today and the pre-market hours tomorrow, and then we see a little bit of a rally into this level. Then you have to watch to see if those levels are going to break or if this is going to be another resistance point, and then we're coming back down to the 200 SMA down here at 394.76. If that breaks, then we're looking back down to this previous support at 392.48. Hopefully, if we get down to that level, it doesn't break. That would be a pretty bearish day in one push. But then we have this previous trend line down here just below, and then 389.43 just below that level as well. Moving over to the NASDAQ, we talked about the fact that 25 basis points is significantly more likely now than it was yesterday and how that's affecting the NASDAQ. Saw a pretty good sell-off here in the mornings. You took profits when we were wicking resistance up here. Fortunately, I actually was paying attention to the markets a little bit here this morning. I took a little bit of profits, and then we came down to 308, wicked that level multiple times before having a really substantial move back to the upside, retesting VWAP here on the 15-minute chart. Then we sold off here into the close, but we threw a really strong wick to the downside and bounced into the after hours, similar to the SPY. So you would expect that we'll get a little bit of follow through to the upside after we had this pretty solid basing formation down at 308. Certainly possible that we come back down, retest 308. If we don't hold that 308 level, we have the previous day's lows here at 307.09. Probably 307 flat is a decent level as well. And then zooming out here on the 15-minute chart, if that 307 level breaks, there's actually not a ton of support until we get down to about 305 for this higher volume level, and then 303, which was this previous consolidation low. So pretty decent downside risk here if we do break down like it looks like we might. But if 308 holds, we can push back up to 310.80. And then if we break out from there, then we're looking back up to 312.96 or 313 here on the NASDAQ. Moving over to the Russell and the Dow on the hourly chart, you can see we gapped up on the Russell, tested resistance, came down, tested support and VWAP on the hourly chart, and then rallied here into the close. Did have a little bit of selling pressure at resistance, but we tested VWAP again, and you can see we're rallying after hours, looking for a break of this 174.38 level, pushing up to 177.38 and the 200 SMA here on the hourly chart. If we do get rejection at this level, looking to retest that 172.40 level, and then 170.35 as your next lowest level. If that breaks down, then 167.47 as your next low for tomorrow. Really, this looks bullish, and I do expect to break out from here. Looking at the Dow, you can see we have to the upside, looking at the high from this previous consolidation up at 326. That level breaks, then we're looking to 327, the low at this previous down move before we saw that solid bounce. And then you can see the top level up here at 330. If the 200 SMA on the hourly chart does hold and we break back down, then we're looking at the 55 EMA down here at 323. And then we have the area of highest volume here at 321.43. So those are the levels I'll be watching for tomorrow's session. Again, looks pretty bullish, but that 200 SMA could be pretty strong. You can see we threw a really strong push through it here today and then got rejection and closed just below it, which is interesting, but this is the second retest. This is not the first one, so certainly could push through here, but this strong rejection in the last hour is definitely interesting. And you have to watch this one pretty closely if you are trading it, really in either direction. Moving over to Apple and Tesla here on the hourly chart, you can see Apple not nearly as strong as it has been. It's still in this consolidation area, moving sideways. We tested the low from yesterday to hold, which is good. This does break down, then we're looking to this previous low here at 156.79. If that level breaks down, then we have this previous area of highest volume down here at 155. So a couple of levels to the downside to watch. If it does hold, then we're looking to 159 to the upside. And then if that level breaks, then we're looking to 160.78, possibly up to that 162 level that we wicked going back to Wednesday from last week. But overall, this does look like a bit of a reversal here on Apple. Moving over to Tesla here, a little bit stronger, gapped up, threw some wicks to the upside, tested the previous day's high, and then found some support. We're above the 21 EMA here on the hourly chart, which is your nearest level of support, trading at 191.41. Like to see that hold and push back up to this 193.50 level. If that level breaks down, then we're looking to 197.75 or this area of highest volume, 179.18. Looking at the MACDs here, you can see looks like momentum to the downside on Apple is is tapering off and starting to step in the bullish direction. RSI on both charts is still a little bit bearish. Momentum here on Tesla stepping down as well. So both of these look like they could go down. Apple looks like it might have bottomed a little bit and looking to retrace early in tomorrow's session. Moving over to Google and Meta just for a moment, highlighting that Google has topped out here. We made a slightly lower high after Friday, and then we came down, tested support here, looking to see whether we bounce off this level or not, or if we're going to come down to this 101 level at this previous consolidation. And then below that, we have the 144 EMA sitting at 99.71. So looking to bounce, retest some highs up around 106, or break down and potentially come to 101 or 99.76. Moving over to Meta, you can see similar thesis, making a slightly lower low from previous prices, looking to retest 199.74 or the 144 EMA down here at 196.79. Moving over to staples versus discretionary on the hourly chart, you can see staples massively outperforming, gapping up, creating that bullish day. Discretionary did gap up, did retest Friday's highs, and then rally a little bit here, but basically flat. And when compared to staples here, you can see it's clear outperformance from staples, indicating that we probably have overall downside risk in the markets going into the next week or two. Moving over to semiconductors here, you can see semis continue to downtrend at least a little bit here on the hourly chart. Trend is still bullish on the longer term. You can see we're well above the 55 EMA. You can certainly see a push back down to this 247 area right at the 55 EMA and then bounce from there and push back up to new highs. Certainly possible here. But in the short term, bearish momentum on the 12-hour, bearish momentum here on the hourly chart. 144 EMA sitting down at 247.50, so certainly could see a little bit of downside if the level we're at, basically right here at support 251.50. If that level breaks, then we're looking at 247.50. And then if that level breaks, then we're looking at 241.62, this area of highest volume on the 12-hour chart. And then if we do continue to rally, looking at 256.85 or the next high at 262. Moving over to yields, interestingly, we had a pretty bullish day. You can see that big wick to the downside. We talked about this not being quite broken. And now after today, you have to assume that this is going to look a little bit more bullish, maybe come up and retest the 4.26 level here on the 2-year, looking at 3.57 here on the 10-year. If those levels break, then you're looking at 3.64. Momentum definitely stepping in the bullish direction here on the daily chart. Similarly here on the 2-year. Looks like the yields are starting to buy into the fact that we're probably going to get 25 basis points in May, which obviously will put some pressure on the markets. Moving over to the dollar here on the 4-hour chart, you can see we rallied on Friday, sold off here a little bit on Monday, came into an area of potential support, certainly could bounce from here. Does look like a minor pullback in this shorter term bullish trend, certainly possible. If we do come back down, make a double bottom, that's also possible down here at 101.94, retest these wicks, and then find support back up to 103.64, certainly possible. If we find support here, then I would expect to go a little bit higher, maybe up to 104.35. But once again, the dollar has been holding in this area for a couple of months, and we really need to see a big push one way or the other if we are going to break out. Moving over to JNK, basically flat on the day. You can see we did close at the low though. If we are going to break down, it's probably going to happen tomorrow. Looking down at that 89.59 level, going back to the lows from Monday of last week. If that level breaks down, then we're looking at $89, which would be the next level of support. That area breaks down. There's a couple of prices below there, but $89 is what I'm looking at to hold. If it's going to hold, we want to see that happen. And then we can kind of see markets probably drift sideways in the medium term. Moving over to TLT just for a moment, you can see we gapped down and then fell, came down and retest the hourly 200 SMA just below the major trend line, looking to retest that tomorrow and potentially move lower. Obviously, higher yields are going to be bad for TLT, so if it does look like we're more likely to get that 25 basis points in May, should expect TLT is probably going to show some weakness in the short term. Moving over to the VIX, you can see we continue to downtrend. 12-hour chart, RSI, momentum showing bearishness. Same as the 4-hour chart. If we do break below this previous low, then we should see a little bit of a rally, come down and retest this 19 or even the 1850 level. That would be interesting. And then we have to see what happens there. If we do find support, then that would be interesting and look for more downside in markets. But right now, with this trend that we have to the downside in the short term, we should expect that the S&Ps and probably the Russell are going to rally at least over the next few days. Moving over to my accounts, you can see I did fairly well today, up almost $300 with significantly less trading. Overall, did pretty well. You can see I ended up having a 307 put here, which ended up in a profit. I did trade some 308s in the short term, made some money on those as we rallied and then closed those out. And then we came back down and I re-entered a 307 for tomorrow as well as a 308. So averaging at that 307.50 here. And then in terms of credit, I ended up getting about $1.78 in credit. So looking to enter right around that 307 level that we looked at on the NASDAQ. It does give me a little bit of downside protection. If we do just fall through the floor and take out that 307 level, obviously I'll take these puts out and try to reestablish. But right now, the NASDAQ has been going sideways, which is fine to sell puts at reasonable prices. And then looking at the IWM here, I did end up selling a put credit spread at 173. I think 173 is going to be a pretty strong level, and the Russell does look strong. You can see this strong outperformance here, $2 up on the Russell, whereas the NASDAQ was down $2, which means I'm a little bit more bullish on the Russell going into the next few days. And you can notice here I do have a 2-day expiration on that as well. So I'm a little bit more bullish over the next few days on the Russell. And I did get pretty close to price, 173 versus the 173.80 that we closed at. We're up a little bit after hours, but still a little bit more bullish here on the IWM after the price action that we saw. And then I did enter at hopefully a reasonable price here on the NASDAQ. Depending on what we see in tomorrow's session, we are up a little bit after hours on the NASDAQ as well. So it's good to see. And hopefully we can continue this kind of sideways choppy motion, which generally rewards good entries here on the NASDAQ. Let me know down in the comments section what you think of the market or the SVB acquisition. Is this banking thing basically over? Is this all that we're going to get? Has the Fed propped up the banking system enough to make sure that we don't have any further issues? And can we handle another 25 basis points in May? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.